In June 2026, the South Korean stock market hit an all-time high. 116% up in 6 months. The sixth largest stock market on Earth. Retail investors mortgaging their homes. Students borrowing money. Office workers putting their wedding down payments into leveraged ETFs tied to Samsung and SK Hynix. Then one report landed that China had begun mass production of its own chip manufacturing tools. One report, one day. The KOSPI crashed 10.8%. Samsung fell 13%. SK Hynix fell 14.7%. By the end of July, the worst month in Korean stock market history. Worse than 1997. Worse than 2008. $2 trillion gone. But here is what makes this story extraordinary. South Korea was dirt poor in 1953. Poorer than Ghana, a country in rubble after a war that nobody won. And in 70 years, it built the chip empire that the entire AI revolution runs on. How? And why did it just collapse in a month? That is what we are going to find out today. Chapter 1. From war rubble to world power. In 1953, South Korea was one of the poorest countries on Earth. Seoul had been captured and recaptured 4 times. GDP per capita was lower than Ghana. Life expectancy was 47 years. 70 years later, Samsung and SK Hynix control 60% of the global memory chip market. Monthly exports hit $102 billion in June 2026. The government was projecting 3% growth, the strongest in 5 years. How does a country go from nothing to that in 70 years? It does not happen organically. It gets engineered. In the early 1960s, military dictator Park Chung-hee decided South Korea would not develop gradually. The government picked industries, directed bank lending, protected companies while they grew, and forced the mergers that created the chaebols, Samsung, Hyundai, LG, SK, the giant conglomerates that still define the Korean economy today. Between 1960 and 1990, South Korea's GDP grew 8% per year for 30 consecutive years. The economy became 10 times larger within a single generation. In 1965, Korea exported dried fish and raw silk. By 2000, it exported the chips that ran the world. The miracle was real, but it was built on one critical flaw: concentration. Everything depended on a small number of enormous companies in a small number of industries. That flaw did not matter during the miracle years. It matters very much now. Chapter 2. The crack that was ignored. The first warning came in 1997. The chaebols had borrowed massively on the assumption that growth would never stop. When the Asian financial crisis hit, the Korean won collapsed 50% against the dollar in weeks. The IMF arrived with a $57 billion bailout, the largest in history at that point. Companies collapsed. Unemployment doubled. Ordinary Koreans donated their gold jewelry to stabilize the currency. Korea recovered, faster than expected. The IMF loans were repaid ahead of schedule. Samsung, which nearly went bankrupt, emerged from the crisis leaner and more focused on semiconductors than ever before. But the fundamental structure did not change. The chaebols remained dominant. The concentration remained. The lesson of 1997, that putting everything into a small number of enormous bets creates catastrophic downside risk, was heard. And then quietly ignored as the recovery accelerated. Because the bet kept working. Samsung kept growing. SK Hynix kept growing. Korean chips became more essential to the global economy with every passing year. And then AI arrived, and the bet went into overdrive. Chapter 3. The AI supercycle and the bubble. AI changed everything for South Korea. Because AI needs memory chips, enormous quantities of memory chips, and South Korea makes most of them. When Microsoft, Google, Amazon, and Meta began spending hundreds of billions on AI infrastructure, the demand for Korean memory chips exploded. Samsung and SK Hynix could not ship fast enough. Prices surged, profits surged, the stock market surged. From its April 2026 low, the KOSPI rose 116%. It hit an all-time high of 9,385 in June. South Korea briefly became the world's sixth largest stock market. The government raised its 2026 growth forecast to 3%, the strongest in 5 years. Monthly exports hit $102 billion. Real gross domestic income surged 15.6% year-on-year, the largest increase in 38 years. Every headline was superlative. Every data point was record-breaking. The narrative was irresistible. South Korea had positioned itself at the center of the most important technology transition in history. The country that had built itself from nothing was now indispensable to the AI future. And retail investors believed it completely. Outstanding leveraged bets reached a record 29.2 trillion won, roughly $19.7 billion in early July. Retail investors piled into single-stock leveraged ETFs tied to Samsung and SK Hynix. Students borrowed to invest. Workers put savings into margin accounts. The wedding down payment story, the 39-year-old who put his home deposit into the market, was not an outlier. It was a pattern repeated across the country. When everyone is leveraged in the same direction, the reversal is not gradual. It is catastrophic. Chapter 4. The Crash. July 2026 will be studied in financial history classes for decades. The KOSPI peaked at 9,385 in June. By mid-July, it had fallen 25% from that peak. The speed of the decline triggered circuit breakers, automatic trading halts designed to prevent panic selling from spiraling, 6 times in the first 2 weeks of July alone. The mechanism was straightforward and brutal. Leveraged ETFs, which had become enormously popular during the rally, need to rebalance when markets fall. When a leveraged ETF falls, it must sell more of its underlying holdings to maintain its leverage ratio. Those forced sales push prices lower, which triggers more forced sales, which pushes prices lower again. A feedback loop of mechanical selling, amplified by $19.7 billion in leveraged bets, all pointing in the same direction. Then on July 28th came the final blow. A single report that China had begun mass production of homegrown deep ultraviolet chipmaking tools, the technology previously dominated by ASML and used to manufacture advanced chips. The implication was immediate and obvious. If China can make its own chip manufacturing tools, it can make its own chips at scale, without buying from Samsung, without buying from SK Hynix. The KOSPI fell 10.8% in a single session. Samsung fell 13.4%. SK Hynix fell 14.7%. Trading was halted multiple times. By the end of July, the KOSPI had fallen 33% from its June peak, the worst monthly decline in the history of the Korean stock market. Worse than 1997, worse than 2008, worse than COVID. $2.18 trillion in market value, gone. In 1 month. Chapter 5. What this reveals. The crash does not mean the Korean economy is broken. GDP is still growing at 3%. Exports are still surging. The semiconductor industry is still dominant. What the crash reveals is structural. South Korea has built one of the most concentrated economies on Earth. Chips account for 42% of total exports. Samsung alone represents roughly 20% of exports and a significant chunk of the entire stock market. The KOSPI essentially is Samsung and SK Hynix. That concentration was fine when the AI chip boom was accelerating. It becomes existential when China threatens to enter the market. The China chip threat is not new, but mass production of homegrown DUV tools is a qualitative shift, not a threat, an execution. China is not planning to compete. It has started competing. And here is the deeper problem. Every industry South Korea has dominated. Steel, shipbuilding, displays. China eventually entered and commoditized. The question for the next decade is whether chips will follow the same pattern. Chapter 6. The structural risks. Beyond chips, South Korea faces structural challenges the bull market obscured. The birth rate is 0.72 children per woman, the lowest of any country on Earth. The workforce will shrink. The pension system faces stress that no semiconductor supercycle can fix. The leveraged retail investor problem is acute. The crash wiped out 2.3 trillion won in forced liquidations from ordinary people, students, workers, families, who borrowed to buy single-stock ETFs and believed the narrative of inevitable AI dominance. The political volatility adds a permanent risk premium. In December 2024, the sitting president declared martial law. He was removed within hours and impeached. The constitutional crisis lasted 6 months. The new government has deployed $20 billion in fiscal stimulus, but the underlying political fragility is real. And the North Korea risk never disappears. The peninsula remains technically at war. South Korea went from war rubble to world power in 70 years. Built on one model. Pick the industries that matter. Build the companies that win them. Bet everything on that. For 7 decades, it worked. But concentration is a double-edged sword. The same focus that built Samsung into a global champion made the entire Korean economy dependent on Samsung's success. The same AI boom that sent the KOSPI to 9,385 sent it crashing 33% when one report suggested China was closing the gap. The crash of July 2026 is not the end of South Korea. The economy is still growing, the chips are still shipping, but it is a warning about what happens when a country bets everything on one industry, about what leverage does to a market when the narrative shifts, and about what China's technological advance means for every economy that built its prosperity on doing something China has not yet mastered. South Korea built a miracle. Now it has to figure out what comes next. If you want to understand how to invest in semiconductor and technology supply chains, check out my complete investing masterclass, link in the description.